Hey, welcome back to my channel. Happy Monday. Today we are discussing DXY, which is dollar index measured against a basket of currencies such as Canadian dollar, euro, pound sterling. What I wanted to show you is the DXY against Bitcoin, which is a risky asset. If you look at this graph, the candles are the DXY, and this graph is the BTC. So when in the first box, as you can see, as DXY tended to go down, Bitcoin rose, and as DXY started going up, Bitcoin fell. Similarly, in the same box, as DXY fell, Bitcoin went up, and as DXY rose, Bitcoin fell down. So, what is the significance? The significance is important because many traders in many countries they buy Bitcoin, and the way they might be doing it is they are borrowing in their local currency to purchase dollars, buying Bitcoin. And when DXY goes up, which means the dollar becomes expensive, now they have to use more of their local currency to pay off that dollar debt. So they tend to sell off risky assets. So you should keep this in mind while you're trading and look at DXY to see how it is doing. The DXY has been going down for a while, and I'm expecting that the dollar index will rise, which will create a little bit of a liquidity problem, and that might cause a sell-off in risky assets. Risky assets can be anything. It can be Bitcoin, gold, any other assets can be risky assets. Even stocks might go down when the dollar starts rising. So, as you would have noticed on October 10th, which is last Friday, the market sold off because the President of the United States came out with a tweet saying that he would be imposing 100% tariffs on China. But then later he walked back that statement, and on Monday the market went up. So market has been kind of fluctuating in that range every day. It's been going up one day and coming down the next day, and that's all very fine. And but we have to keep in mind that there is a possibility that there might be a market correction. Now, given that there might be a market correction, it is not necessarily going to happen now or in the next 2 or 3 months. So my suggestion, what I recommend is that you hold 30% in cash in your brokerage account, so that if there is a market correction, you will be able to buy stocks at a lower valuation. However, I also encourage you to add little bit of stocks as every week or every month, just so that you don't miss out on the rally. And when you see that your stocks that you bought in October, by December it has gone up, like let's say 30%, 40%, I recommend that you sell off a little bit of that to lock in some profits, because at some point, obviously, those stocks will again come down. So that's it for me for today. If you like my videos, please click on the like, subscribe, and share button.